Luckily, okay. And welcome back, ladies and gentlemen, to our first session today. This is a snapshot looking at the impact of COVID-19 and in particular the emerging risks and future outlooks for small and microcap IROs. I'll tell you a little bit more about what we're going to be speaking about in just a second, but first let me introduce you to our first panelists of the day. First of all, I'm trying to work out actually where you are all in conjunction so I can point out of my screen to you. But Jason Paltrowitz, you're the first one on my screen, Director and Executive Vice President from OTC Markets. Then we have Vlad Suglobov, the co-founder and CEO of G5 Entertainment, and AJ Krick, Chief Financial Officer from Smith-Midland. Gents, it's such a pleasure to have you all today. I'm going to ask you to tell us a little bit more about your experience of the immediate impact of COVID-19 on small cap IR in particular. And maybe a bit of a chance for you to introduce yourselves and your company. So Vlad, let's go to you first. Can you tell us a bit more about G5 Entertainment? I know you're a mobile game developer, largely Swedish, but you have staff all over the place. That must be quite the undertaking during COVID.
Yes, we are listed in Sweden, but we have people in many offices in 5 countries around the world. And it used to be a distributed workforce already. So we had a lot of technology solutions in place to coordinate the teams. Some of our project teams have been distributed all over our offices and in different countries. So that's why we already had processes for remote collaboration. So when it happened, we moved everyone to work from home. And I guess that's the advantage we have as a technology company. And we managed to do it in a matter of a week, I believe, with no disruption to the business. So that worked pretty well. And we actually saw efficiency go up, I guess, just in the moment and the seriousness of the situation. So people get really serious about delivering on their performance goals and everything. And that was actually a positive boost to us, as well as on the demand side. Obviously, games industry and including ourselves kind of benefited from the lockdowns because there was a wave of interest towards interactive entertainment. When it comes to IR, I think the last meetings that we did in person was at the beginning of March in Stockholm, and then it all went virtual. I think it became more efficient, just without the travel, being able to do more meetings, and investors are being more willing to do remote meetings, and it just became the norm. And to be honest, as a programmer and a little bit of nerd, that kind of works easier for me. So I don't have to travel as much as I used to. And I like to travel, but these, like really short flights somewhere just to meet a few people, they're kind of stressful. So that went away, and I think that's a good thing. So this, in my view, this was a push towards more efficient investor relations, and that's a good thing that happened, certainly from our perspective at least. But I think it also opens opportunities for investors to probably meet more companies. So hopefully that works for the investor community as well.
Yeah, I think so. It's an interesting mix of driving efficiency and also mandating efficiency as well. So we'll come back to a couple of those points, Brad. Thank you for that. AJ, similarly to you, New York listed cement firm Smith-Midland, and obviously a lot of activities tied to essential business work. So was again a bit of a different experience for lockdown for your company, I imagine.
Right, definitely. So we manufacture, license, and lease precast concrete products. So we were deemed essential under manufacturing and construction. So for us, it was kind of business as usual on the manufacturing floor. We still had a lot of office people that were able to work from home, but our main goal was to keep all of our associates and our community safe. So on the IR side of that, investors, they really wanted to know that we were operational, that revenues weren't going to be impacted, which they were slightly, but that, you know, we're still going to be there moving forward. They want to know how we're dealing with the situation. They want to know backlog, bidding landscape. So they're still looking down the road just like we are. So it's really how you're going to navigate this whole situation moving forward. So the thing we did, we pulled back some expectation, and we don't know how we're going to be impacted in the near term, but we're still focusing on that long-term plan for the company and how we're going to be successful and provide shareholder value.
Thanks, AJ. I think that we're going to discover later on that's going to be the key, isn't it? And fostering that openness. We'll find out a bit more about how we can do that. And Jason, from OTC Markets, you're obviously seeing a great deal of small and micro cap companies who are trading on your markets and the sort of things they're up to. What are your observations about the impact of COVID-19 here? Do what Vlad and AJ tally up with, you know, the companies you're speaking to?
Yes. So obviously we're delighted both AJ and Vlad companies are on our OTCQX market, as are we. So I speak to this as kind of 1/3 of the OTC Markets IR team, as well as the head of our corporate services business, where we have over 1,000 companies from around the world, kind of in that small and micro cap space. You know, I got off a plane similar to Vlad. My last meeting, I came back from Denmark March 8th and was home March 9th. And so for us as a company, it really was kind of get into gear and figure out how we continue to run the company, how we support our people, and how we continue to tell our story. And all of that had to be done very quickly. As we look at the companies we service, you know, I think AJ and Vlad, interesting experiences, and I think kind of talk to most companies, but there was a month to a month and a half where there are a lot of companies, you know, where their entire business is shut down. We're fortunate, we're a subscription model, and so our revenues continue to grow. And obviously Vlad talked about the increase in gaming, and AJ stayed open. But for a lot of companies, there was the uncertainty of whether or not they could function at all. That was tough, both from maintaining a workforce and just keeping the lights on, but also from an IR perspective. And we saw, at least in the first couple of months, companies just kind of battening down the hatches and not doing anything and just kind of in full-on survival mode. I think as you look through kind of March, April into May, a lot of the companies that we deal with, you know, they weren't dealing with outside, they didn't care about investors or telling their story. They cared about whether they could keep the lights on. We're fortunate. I think we've come through that. And I think what we've started to see kind of in that May, June, July is companies that were able to survive, and most of them did, kind of realizing that we're in a new normal. They were able to get their technology up and running. They were able to get their people working from home, and really started that process again of engaging investors, the investment community, and starting to think about whether it's financing needs or just telling their story. Seeing that new normal, you know, we operate the virtual investor conference series, and all of a sudden we saw huge spikes in demand for companies that wanted to present to investors on that platform. We saw huge spikes in demand from investment banks and advisors that wanted to utilize that platform to bring investors to companies. And I think we're starting to see that become the new normal. I keep saying the new normal. We all want to get back on a plane. I saw the other day that Qantas is starting to just fly people around Australia with no destination just because people want to get on a plane. But I think people are resigned to the fact that you can meet more companies more efficiently, talk to investors, more investors, kind of in this virtual world. And so we continue to support our issuers in those endeavors.
It's interesting you bring that flight up, Jason, the Qantas flight. I believe it's sold out in 10 minutes of tickets being on sale. That's how desperate people are to get back to, you know, cramped legroom and packets of peanuts. But it's clear we're missing that. And, you know, we at IR Magazine feel that, you know, the lack of face-to-face is an issue. And I guess one of the key parts to being able to ride the current situation as an IR is having built up, you know, a bank of goodwill, of openness, of trust with investors. So I wonder, when we're looking forward, as you've all mentioned, you know, this is still a situation that's unfolding. There's no clear end in sight yet. How do you deal with the fact that this is still an emerging situation and one where ongoing communications are going to be paramount importance? AJ, I wonder if you could kick us off here, because we were talking in our prep call about that need to build trust. How's that something that you've undertaken?
Yeah, so building trust is extremely important to us in this uncertain time. So what we've done, we've tried to add a little more granularity to our story, and we're clearly defining how the company is negatively impacted. So we're not hiding anything from investors. We're saying exactly what's going on, and we're defining what the risks are moving forward. And those are short-term risks that we see. So really, we're doing that while still putting out the long-term strategic goals and the long-term strategy for the company. So along with that, what we did is we didn't set any revenue or earning expectations in the near term, but we focused on those long-term macro trends. And that's really that defining thing that's going to drive the shareholder value and what we can do to offer that granularity that they're looking for.
And Vlad, similarly, the same to you. These points about openness and building that trust.
Yeah, we try to be, as open as possible also. So we, because the uncertainty was high, we chose to basically say what we see as we saw that. So we started, when it happened, we started communicating about moving the workforce to work from home. We started communicating that we see this increase in the demand and in the industry overall, and for us as well. And we were also very cautious with any attempts to quantify the effect, like a long-term and medium-term effect on our business. Although it seemed positive in the beginning, there were concerns about how long it's going to last, or are people going to be able to monetize, or are they willing to monetize? Are we seeing a wave of new users that are interested in just playing for free, or will they eventually make payments in games? So we didn't know answers to these questions, so we just tried to explain what we are seeing and all the different ways it can evolve. And we also made sure to continue telling our story. There's a lot of interesting happening, was happening with the company when it happened, and that continued to happen. There were some fundamental changes and improvements in the business that we were going through. Marketing was getting more efficient. We were starting to deploy a large number of new games to the market after a while when we didn't have any new releases. So we tried to also paint this situation as a background and then explain what is the effect on the fundamental situation of the company. And we continued to tell the story, and we kind of led with the fundamental story. And then we just explained that this is how the situation with the lockdowns affects the fundamental story. So I think that worked quite well, because our share appreciated about 5x from the minimum. That immediately happened after the distress all over the world to the kind of temporary, we hope, maximum that we have reached afterwards. So I think we did a good job, and I think it pays to be quite open. And if you see uncertainty, just communicate that this is the uncertainty that you are seeing, and try to maybe explain scenarios that can work. And that can unfold. I think that's, at least for us, it worked quite well.
Very glad to hear. Jason, just wanted to touch in with you on that point as well, and to raise a second related point, one I wanted to make sure we get in, which is the problem of financing at the moment, because there are a couple of extra issues around that, I imagine.
Yeah, so it's interesting. It's not that long ago. It seems forever ago. The Levi Strauss and then the WeWork IPOs, right? And the talk around both of those, and from an investor relations perspective, all the talk was about getting back to basics, right? When you saw WeWork kind of implode on itself, there was this talk of get back to basics, revenue, from an investor relations perspective, telling a story. And then we jumped into COVID, and as we've been speaking to our clients and our issuers, it is that back to basics of investor relations. Is you got to be able to tell the good with the bad. All too often, especially in the small cap and micro cap space, where sometimes the founder is the CEO, and you have management teams that maybe aren't as familiar in the capital markets. There's this tendency to want to tell the good story, but try to shy away from the bad story. I think obviously we all know that investors don't mind a bad story or a bad situation. It's really, what are you going to do to get out of it, or what's your plan to exit that bad situation? And we've spent a lot of time with our clients reminding them of that. We're all in this situation, and I think investors understand that not everything is rosy for everybody during this time. But if you have a plan, if you have a strong management team, and you have trust and transparency in your disclosure and how you talk to your investors, they'll reward you for that, whether it's through maintaining their investment or seeing an opportunity to invest long term. With financing, I think what we saw at the beginning, certainly in March, April, May, for a lot of companies, is how are they going to finance themselves to maintain their business going forward? There was this rush of, we're going to need short-term capital even just to keep the lights on. Certainly the PPP program in the US was very helpful in getting companies the money they need. But unfortunately, what you also see in the world of small and micro caps is a lot of bad actors that take advantage of management teams that are desperate. And so certainly we saw a lot of bad financings. We saw a lot of things that you see that we spend a lot of time educating and talking to companies about and monitoring things like promotion, insider promotion following a financing, and how that works. And so for us, we take the education approach. We've got large companies and small companies on our market. We've seen it all. And when you get into a situation like COVID, we feel it's our responsibility just to help management teams through some of the things they're dealing with or are forced to deal with when you get to a situation like this. So advising on how to do financings, the type of people to get involved with, how you message those things, what promotion looks like versus traditional investor relations. Those two can be very different, and how the market reads those, and trying to help companies work through. I think we've been relatively successful in that. And certainly for us, it's brought us a lot closer to our client base, which has been really nice and helpful.
Very glad to hear, Jason. Listen, I just want to remind everybody in our audience that you can submit any questions for our panelists on the Slido application. I believe there will be a link put in the hop-in chat any second. We will make sure we leave some time to address those. I have a couple more questions for the three of you, though. Jason, I just wanted to touch back in with you, because looking further ahead as well, when we were preparing, you mentioned that there are a few kind of regulatory developments on the horizon that are worth being aware of, and I'm sure our audience would appreciate just a kind of a tip through some of those.
Yes, so COVID has not stopped the U.S. regulatory agencies from continuing to move forward and try to make actually some meaningful change, certainly for the world of small caps, or just generally speaking. Things to be aware of, and I won't go too in depth. 13F, the mechanism through which investment managers disclose their holdings. There is a proposal in place that will actually reduce the disclosure. We don't feel it's necessarily the right thing to do. We'll be commenting on that. But certainly as it touches smaller cap companies, it will limit the amount of disclosure of holdings from investors, insiders, and institutions. There's work to open up ESOP employee plans for small cap companies or companies that are traded on our markets. There's move to expand margin eligibility for smaller cap securities. And then there's a very large, the final rule was just set last week, something called 211, which is really helpful in helping small cap companies come to market and expand the transparency and disclosure requirements to have those companies be publicly traded. So those are some of the regulatory issues that are working their way through. all of which will be helpful in one way or another, depending on how they turn for small cap companies. And we're certainly spending a lot of time commenting on those, working with the regulators to expand and grow those. And, you know, I certainly am here if any of the people watching or listening are interested in learning more as to how that may affect their company or things they might want to comment on or don't understand, positive or negative. You know, we stand here, our team, to help companies understand those and navigate those.
Yes, absolutely. I'd urge anyone in the audience to definitely lean on OTC Markets experts as you can and as you will. AJ, just wanted to come to you on that point of filings. Again, something we spoke about a lot. That was a big part of the way, you know, you mentioned to me that you built credibility there. Can you delve into a little bit how you built that up over time?
Right. So obviously one of the big things as a micro cap company, or even as small as we are a nano cap company, is making sure your filings are timely. That's obviously essential, number one. And number two, especially during this time, is taking that MD&A section and really providing that detail that investors can dig into and really get those good pieces of knowledge that's going to help them understand your business even better and understand during COVID of how it's impacting the company. And you know, along in that MD&A section, you want to make sure you're not setting any unrealistic expectations because the facts are we don't know what's going to happen tomorrow. It kind of seems like we're past it now, but there's so much uncertainty going into this, I would say, winter season here. So we're really taking a lot of precautions there. And I think the other thing in the filing and the detail is explaining how revenues and margins are impacted by COVID-19. So it's really kind of breaking out that section. And, you know, for us, there was short-term margin impacts. So what we decided as being a essential business, we kept everybody working, even though revenues slowed down a little bit. We made the decision internally to make sure everyone's working, everyone has a paycheck, is able to keep their families safe, and do our part to help the economy moving forward during this uncertain time.
It's interesting to, you know, I think one of the takeaways we at iMagazine have found from, you know, speaking to companies at the moment is that it almost becomes, what's the word? It's almost part of ESG communications, right? They're drilling down into your social impacts and your impacts on your stakeholders to a large degree. And it's funny that it takes a big event like this maybe to promote that, but it sounds like that's something that comes naturally to what you're doing, AJ. Vlad, just wanted to put the same to you, maybe not specifically about filings, but in general, that slow work to build credibility and you know, consistency.
Yeah, I think one challenge that we had, or a big difference to many other companies in this situation, is that we are kind of in a reverse phase when it comes to the lockdown effect, because it's considered a positive for the games industry, and then when the lockdowns are relaxed, it's actually a negative for us, while it's positive for many other businesses. Mm-hmm. So I think we saw that dynamic in the market, and so we try to explain that, you know, still keep telling our fundamental story about the business developing and new games being launched, and explain that the lockdown situation kind of accelerated the inevitable transformation of the business into a better business with a larger scale, and that the relaxation of lockdowns does not reverse that. The users that came to us, they came to us, so they will stay. It kind of regulates maybe the number of new users in a unit of time that join us, but those who came to us, they stay for a long term statistically. So we've struggled with that a little bit, and we had to spend, I think, extra wording in our reports on explaining exactly how it works. And so with regard to the upcoming winter season, you know, seasonally for us, it's usually quite strong because people are naturally spending more time at home and with their families. And this is when we see that our audience likes to enjoy their games. So this year, we'll try to probably explain that it can be extra good I guess for us, as everyone wants to be more safe, and in case there are some additional restrictions on people moving around. So I mean, we are happy to provide some relief to people in this situation, you know, and this is kind of what we work for, right? We try to bring joy and some distraction from maybe negative things happening in the world by providing these little games to enjoy to our players, and we're happy to be there when it's in demand, whether or not they're making payments. And you know, our games are free to play, so you really don't have to pay, and 90% of our audience never ever pay anything. So that's just very I would say satisfying for us as a business to be able to help people a little bit in these situations. One other thing is that when we were, I think when we were telling our story, when it just began, when it started, and there was a lot of distress and uncertainty in the markets, it took some time to build the trust and to explain that our business is not going to be affected negatively, and if anything, looks like it's going to be affected positively in the short term. You know, we saw that it's not reflecting in the share price, so we started doing buybacks, and we were in this unique position that business did improve at the same time as the share price kind of deteriorated. So we decided that it's a good time to do buybacks. So we returned quite a bit of capital to the shareholders by doing buybacks through this period. And in retrospect, that was a great decision, but it also showed to the market that we were serious about our words, that this is actually a fundamentally very good situation for the business.
Yes, like you say, following through on, you know, not promises, but reassurances and trust you'd already made there. Jason, just wanted to come to you before we go to some audience questions here. You said that at a time like this, you've coined this phrase. I do not want to claim any credit for it. You said back to the future from an IR perspective was the kind of flavor of the month. Can you tell us a little bit more about that?
Yeah, I think it goes back to what I said, right? It's back to the future of just the basic blocking and tackling of investor relations, right? You're the conduit from the boardroom to the living room. An investor relations professional is, right? Telling the company story to the investor. And, you know, when you go through cycles, as we've been through, you know, the unicorns that are listing and all the hype around the investment community, when you get to a situation like COVID, it's back to the basics. You know, AJ and Vlad are speaking it. You have to be able to tell your story. At the core, what is your business? How do you operate? What are your plans for growth? How do you intend to achieve that? What are the things that would put that at risk? What are the things that might propel that? And really going out and speaking about the core fundamentals of your business and why it is a good investment proposition. And I think when you go through these boom cycles of markets and some of the things that we've seen, certainly in the last 10 years, sometimes investors can lose sight of that, companies can lose sight of that, and it becomes more about talking up a little more of the hype than the, you know, the fundamentals. And so I think, you know, for all of our companies, and whether it's the virtual investor conference presentations we see, or the one-on-one meetings that even we have with our investors, it really comes back to, you know, where do you make your money from? Where are you going to make your money from next year? What does your expense line look like? How are you going to manage those expenses? Those things are all boring to talk about, but I think they're really what investors want to see from companies now, not necessarily, you know, some pie in the sky hope for what could be. And I think that's nice to see. You know, I think from an investor perspective, being able for companies to be able to offer that type of detail, for me anyway, it's nice to see it kind of getting back to those basics.
Yes, certainly. And as I think we've all three of you have said, it's the bread and butter work which really pays off.
By the way, I would just add one more thing. I'm sorry, Laurie. It's
please.
also really helpful for companies that are not in the sexy sectors. You're actually starting to see, kind of boring companies being looked at as investment opportunities because you are looking at those fundamentals again. Sorry.
Interesting. No, it's fine. We can't all be video games companies, unfortunately. So one question we've had through in a few different forms, and we're going to be returning to throughout today, is looking at online investor events and online roadshows, conferences. All of these are moving online, and there'll be points to be made about how to get over the lack of face-to-face contact, for example, we're all making do with. But AJ, just to come to you first, and I'm going to wrap a few of these together. I know you had a few comments about investor conferences and making those work for you, because one would assume you've got more time and you've got more space to run around and see people. How have you made those work? And are there any particular ways in which they work in a kind of COVID landscape?
Right. So for us, it really allowed us to take this time to strengthen our message. So to do that, we had that long-term focus on the business, and those meetings became so efficient. And for us, they also became extremely costly. So as a micro cap, you guys talked about managing your SG&A costs. That has a big impact for us because we're able to be here and manage the business at the same time. So that's definitely beneficial to us as a company and to the other big thing is we weren't able to be close. So the CEO and myself, we weren't side by side, but what we are able to do is be in separate areas, safe. And so the investors are getting not only the CEO, but they're also getting the CFO. So you're able to kind of navigate a lot of those questions you get that may get deferred at other times. So it really helped answer all questions and all impacts that may come to the company virtually, which is great.
Absolutely. Vlad, just to put a similar question to you making these work, you talked to the benefit of, and you've already spoken to the benefit of, collaborating with your fellow team members and building those internal ties. Is that a bit more crucial now that you're all in different parts of the world?
Yeah, we while in the short run, it was easy to move people to work from home. We were concerned about kind of a longer term situation because we, as a game company, we have to keep the creativity, going in the company. And we used to do a couple of events a year internally where we would bring about 150 people from different offices into one venue. And then this would be a chance for the teams to actually meet in person and, try to do some brainstorming in informal kind of situation and hang out together. And so that was obviously gone. So we replaced it with a number of webinars, and our HR team did, I think, tremendous work in trying to bring a little bit of this informal contact into the collaboration tools that we are using. So we have a pets channel in some of the software that we're using that is like the most visited channel in the company. And we were a little bit worried about that, but then, the feedback was very positive. So we try to promote all kinds of informal contact between employees within these special areas. We started doing more webinars, and then we realized that this is really a chance for us to bring together more people. When we did this in-person events, it was 150 people, and we were thinking, shall we bring everyone together, which is like 650 people? And we were just a little bit scared of all the logistics of doing that. And now we're thinking, well, if we do this event virtually, everyone can attend. So we already tried some webcasts, kind of semi-interactive, where more than 500 people would be present. And so I think that actually helps to bring people together even more than before. But still, in the long run, the concern remains what kind of effect this is going to have on the culture as we onboard more new employees, and they don't get a chance to go to the office, don't get a chance to interact with their fellow team members in person. But so far so good. And we'll probably continue working on these virtual initiatives and try to find a suitable replacement for everything that we did in person before.
Sounds very sensible. Jason, just wanted to come to you on the point of virtual events, making them work. What are kind of your comments, your tips for both in your experience of dealing with investors yourself and companies you're speaking to?
Tips. Well, certainly, I think we're entering an age where we'll see more of these than less. I do not believe that it will replace travel, but I think in many cases it will replace some travel. I think it's important to continue to have kind of face-to-face time, and so I think the Zoomification of investor meetings is good. I will say that one of the things about the one-on-ones and in-person meetings is for an investor to be able to kind of see the CEO or the CFO, right? Being able to see them, how they answer a question. Are they fidgeting? How do they feel? Are they confident when they answer the question? Being able to do that on video is really important, and I think has been very helpful during these times versus on the phone. I know when I speak to people on the phone with no video, there's a tendency probably you're on this maybe, or you're looking at something else, or you're doing something else. And so I think it is important, if you're going to do virtual one-on-ones and investor meetings, being focused and being present has been really helpful. There's some disadvantages to it. I do think face-to-face sometimes can be more helpful. The handshake or the breaking of the bread sometimes is beneficial. I think in the virtual conference world, where you're talking about things like this, also pros and cons. We were talking about it. There's an event that we tend to go to in Canada that's been canceled and is going virtual. And 50% of the benefit of that event for us was just being able to walk around, see people that you haven't seen before, or introduce yourself. Maybe there are booths that you can walk up to and just start talking to people, or you have a booth and they can come and talk to you. I think the virtual world loses some of that spontaneity and some of that opportunity that is unscripted, if you will, whereas these events become very scripted, and there's faces on a screen, and we have this chat, and maybe there's a chat room, but that ability to network goes away. So I think it's important as we get out of COVID, certainly that we have more of these. And again, as a provider of the virtual investor conference series, obviously I want there to be more of these from a revenue perspective. But I do think it will be important to kind of get back on the road and start meeting people face to face. But you can be more selective with that now, which I think is going to be helpful.
Certainly will be. We've only got time for just one more audience question, and it's a quick one before we move on to wrap up. We've talked a lot about the challenges of being a small cap or a micro cap company at the moment and being noticed here. But I wonder if the three of you could answer the question, what are the benefits of being a small cap company at a time like this? What have you found? Has it been faster to react? Has it been a case of having more control over the message you're putting out? Vlad, could you start us off there?
Well, we are listed on the, our primary listing is on the main list in Stockholm. So, I mean, I think we are considered mid-cap there. And we get a lot of these standards of reporting, and our financial team is doing a great job with that. And so there's not a lot of benefits to us from the reporting perspective. We have to do everything, and now obviously there's focus on ESG, and we are spending quite a bit of time on studying that, and there's all these upcoming regulation as well. But I think we obviously, we are kind of lucky in this situation that we did not have any dramatically, disappointing news for our shareholders, and so it's been a difficult time, but it was also very, I would say, interesting for us to to communicate with investors and hear their perspective also. And I think that perhaps there's a little bit less focus on us just because of the size. And if we were a larger company, there'd probably be way more stress about what are the concerns of the investors, what is the result of on the share price. And our share price historically has been quite volatile, I would say. And it's interesting that we were able to continue doing what we were doing and what we were saying that we're doing during the periods of extreme volatility in the share price. So when the situation happened, we were like, well, okay, it happens again. There's this very strong volatility in the share price, but we don't have to overstress about it. So we'll just continue telling our story, and maybe we use this opportunity to do the buybacks and actually use the situation and try to provide some extra benefit to our shareholders who are in this difficult situation with us. So that's the perspective here.
Thanks, Vlad. AJ, the same to you. What do you think the benefits of being a small cap company are at a time like this?
Yeah, so, small cap is quite an interesting market. And the big thing is our current shareholders and potential shareholders, they can pick up the phone and call us. Large caps, they're not able to do that. So they're kind of scrambling, not knowing what's going on. Whereas the guys who really have partnered with us, they're able to say, hey, we're here beside you. Help us understand. We want to help you get through this. We want to make sure the business is set for growth moving forward. So, for us, that's pretty simple. That's kind of really that, you want to say, partnership that we're looking for and what's been the most beneficial in this time.
Very well put, AJ. Jason, the same to you.
I would say a couple things, two that pop to mind. One, as a small cap ourselves, I will say, significantly more agile in being able to deal with this situation in particular. We're just over 100 people. We are a technology company at heart, but having those 100 people, in a smaller company, forget small cap, small company, it's becomes much more family oriented, and everybody worked together to, I said it before, batten down the hatches and make sure the business continues to operate. Everybody has a vested interest in doing that. And I think as an organization, it was phenomenal to see that from a small company. I will say, as a small cap public company, one of the things that beneficial, I believe, is that we're not in an index. The indices become very volatile, and you speak to a lot of IROs who say, I want to be in an index, I want to be in an index. And if you're, number 3,000 in the Russell 3000, yes, maybe you get some additional investors, but you get the not the benefit when the markets become really volatile and your share price starts following suit with a broader index, and you can't decouple your fundamentals from that. And I think, sometimes in cases like this, not being in an index can actually be a good thing for companies, because the focus is on the company and you're not just getting the wave of investor sentiment that runs hot and cold with, the market went down 800 points on Monday just because people thought COVID might be coming back, right? It had nothing really to do with the business fundamentals. And so I do think in cases like this, there is that benefit of having investors, like AJ said, be able to pick up the phone and focus on your business and not have to worry about that outside stuff.
Yes, absolutely. Well said. So look, gents, one very quick then, just wanted to ask you for your final parting thought, your final tip for anyone in the audience considering their own communication at a time like this. Jason, let's cut straight back to you, just because I think I know what you're going to say, but if you could give us your top takeaway.
I'm sorry, you kind of broke up there a little on the technology. So my final tip for communication in this environment?
Yeah, maybe invest in a better internet connection would be number one.
Yeah, better. No, my top tip is keep communicating. In this world, right? When I started in my career, somebody said stocks are sold, they're not bought. Right? That continues to hold true now. You have to continue to tell your story and be present. be out in the market, be in the mix, continue, communicate, disclose, communicate. That's my top tip.
Good start, Vlad.
Yeah, I agree. And I think it is important to try to separate the business story from the background of whatever is happening currently. Is it the pandemic? Is it something else? And we try to keep it separate, explain our strategy, explain the story of the business, and then explain the background on which it unfolds. And, you know, we try as much as possible to keep it separate. And I think it just helps helps investors understand what are you doing in the long run and what are the short-term challenges that you're facing.
Great. Thank you, Vlad. And AJ, finally to you.
Yeah, I mean, we all hope it's short term. So our focus is really on the long-term strategy of the business and how you need to shift to meet the market and customer demands at this point.
The three of you, I mean, you've proven your excellence in communications by being so succinct with your tips. Thank you so much, gents, for all of your expertise today and your time. Hope you will stick around for some of the other discussions we've got coming through the rest of the day. Speaking of which, we're going to disappear backstage for just a second to mic up our next set of panelists. We'll be right back in a second to talk about owning the narrative, strengthening your message, and ensuring the evolving market understands the story. But Vlad, AJ, Jason, thank you so much for your time, and we'll see you in just a sec.